What's up, guys? Welcome back to another trading episode, I guess, whatever it is. Anyway, today let's talk about a failed trade. Okay. Well, I'm not perfect. I make bad decision also. So at some point I do make mistake. At this point, I mean, I'm trying to get an accuracy rate of between 75 to 80%. I know it's a really high percent accuracy rate, but at this point, I think I could get there. But before you could get there, you have to understand and know all the little things. Trading is very meticulous, and you have to pay attention to small detail. And this is what I have been looking at, and I have made a mistake before a few times, and now I start to document it, and and now I was able to get out of this trade. This is AZN AstraZeneca. It has no news today. Okay, this is pure technical. Okay, and it looks really good with the technical. Okay, so but I'm sorry. Let me talk about this. Okay, so basically, I mean, AstraZeneca gap up today. Okay, a decent amount pre-market, and it's kind of like spike up at the open. I'm not sure what the reason was. Maybe because of the market itself. Okay, actually there are a lot of biotech and healthcare drug company was up too. I didn't know what the reason was. Okay, but for this thing, it was good. Like the way it gap up pre-market is spike up at open, retrace to this point, make this consolidation, and then break out above this level. Okay, and the high of this is, as you could see, is 53.98. You look at right here. Okay, 53.98, and look at this right here. 53.98 is a perfect setup, for top breakout on this side, So this, if this is a cup and handle formation, right? Cup and handle formation. It looks so perfect, If I get in here, if it break out, it go up, right? So this is a top breakout cup and handle formation. But as you can see, it fell. If you're gonna get in here, right, at this point, some people wait to 54, okay, to get in, and this did not hit. I think it did hit 54. It did hit 54, okay, and it would fail either way, okay. It depends if you look at the things here, but the thing is there is a problem with this, and I'm gonna go over with you, okay. So basically, if you're gonna get in here, your stop loss would be right here, right? So you would have been knocked out of the trade unless you decided to go out here, which, I mean, that is a big risk reward ratio right there if you do it right here. But it's your call. But if for me, that's what I would risk, this much, to get at least like 1 for 1, at least 1 for 1. But this formation wise, if you're gonna get it, it's for 1 2 3 4 5 6 1 2, so at least double, 1 for 2 if anything. But 1 for 1 would be the partial point. However, this did not work out. Okay, it did not work out at all. I got in, but luckily I saw the sign and I get out right away. Okay, let's talk about this. Okay, if you could look, this is a closer look. Okay, this is a 1 minute chart, this is a 3 minute chart. Okay, intraday, and as you could see, right? So what is the problem right here? Okay, the problem is a couple of things. One main problem I realize is that for top breakout trade to happen very well, you need good volume. Okay, let me bring down my my watch list here. Okay, so AZN today volume is 4 million, right? Average 6-month volume is around 4 million, but at this point of the day, around 10:40, I guess, the volume was around 1 million something. So it's like 1.5 million. So it wasn't a lot of volume traded. So that's one bad sign. Okay, so just so you know. Let me move that out of the way. So that's one bad sign about it. So for a top breakout to happen, you need at least 1-to-1 for the average volume. At least, if I say at that point, you traded for like an hour in already, I would expect at least 1 to 1, at least 4 million share for me to go into a top breakout trade. Okay, so but I took the chance anyway because the setup was quite perfect in some way. The technical part, see, that's why I say technical can fail. Like, even though there's a lot of people like, yeah, I just trade technical, it looks good, I trade it, but there are others like minor information that you don't pay attention to. You could be wrong. Okay, and also, okay, so I did put a note in here. Okay, let open this note up. How do you open this shit up? Read it. Okay, so it had no news. Okay, have low volume to that point. Okay, no volume signal. Okay, volume signal, what we could see here, volume signal, look at this part right here, this part that come up right here from this consolidation break from this point, there was no volume. That's the signal that there's a lot of people interested in buying this, push it up, but it did go up to this point and then it's retraced back. Okay, and at this point, I mean, it's fair to say that fine, usually lower volume selling, but the thing is there isn't a lot of volume coming up here, so maybe this part there's no one going to go up again. Like, all the buyer will already push it up and no other buyer going to push up more for it. And beside, that's why volume is important. There was no volume in the stock, so there wasn't a lot of interested buyer or watcher of the stock. Okay, so people wasn't really watching this. If you look at the volume base, if there's a lot of volume, people are not trading it. So for top breakout, the trade to go well, a lot of people have to watch the stock and trade it. Okay, the percentage why is above like 2% at that time, so that's fine, the gain. Okay, and last but not least, if you watch my channel, I traded with the S&P. Okay, and the S&P is kind of extended, and as you could see right here, right, the S&P retraced all the way down the bottom and then come back at this point, and it's at this point right here, it's trying to break out this top right here. Okay, so if anything, usually it touched the top part and then retrace and then go again. So that's how it usually does. Okay, so at this point, the breakout, it touched it. My rationale was like, okay, so right now is the S&P moving up, maybe it gonna act exactly like the S&P, and but the thing is the S&P did not break out and it retraced, so I got out of trade right away. I literally did got out of trade. I get in, I didn't see the volume signal. Okay, another thing when you buying to confirm the breakout is that volume. Like at this point, the volume should be high. There's no volume here. Like at this point, there's no volume. We're like, okay, bad sign, no volume coming in, low volume, and then we have the S&P is not cooperating with the whole thing. So I gotta get out. So I got out. Actually, I make a couple cents on the trade, but that's fine. I got out. And that was it. So that is the signal for you to not trade a top breakout. Okay, just so you know. And I do have, see, the problem is, right, I experienced that last week with another stock, Mobil. Yeah, so Exxon Mobil, same exact thing here, no news. This is where I got in. Okay, look, volume wise, there wasn't volume either. Exactly, I documented the whole thing about this trade on my thing, and then I was like, okay, I failed, I lost money in this trade. Okay, so basically, I chalk down all the data because I go over every night. I try to go over my trade. Okay, and this exactly like that. It hit that and then it's consolidated and it fell. Exactly the same thing. So it was like, you know what? I took a chance, but I got out, and I learned from this lesson. I make the same mistake a lot of time, but this time I'm kind of like try to not to make the same thing. So I took the chance. I went with a lower size share, and then but that's fine. But this is something you need to learn. There's exactly no volume. Okay, look at this. This go up right here, no volume. So that's a bad thing. All right. So just so you know, and in the same day today, right? We have Dollar General. Okay, let's take a look at Dollar General. Okay, and the top breakout of Dollar General. Dollar General has a top breakout. I wanted to trade this, but I was kind of iffy on it. And then I was watching mRNA for the trade, for consolidation breakout trade. But look at this Dollar General here. Okay, all right. This is where we're focusing. Top breakout right there. All right. Let me move this in here. And let you take a closer look, all right? Whatever. Close enough. Okay, see this, I don't, if you see this formation, 1 break, 2 break, 3 break, I don't typically trade this at open. Some people like love to like, oh, whole number, breakout, gonna short. I don't like that because the chance of this going really high there is a chance. I see it happen usually with penny stock, but for this kind of stock is not that much. Okay, however, as retrace, it consolidates in here. Look, it consolidate. It went up to this point, right? And then it's kind of hold out. Same thing, right? Cup and handle formation here. Cup and handle formation, cup and handle formation. Okay, up to DLTL. I did not take the trade. Okay, just so you know. And entry number, whole number, 98, perfect whole number. Okay, I mean this one, what is it? The high of this is 97.95. Okay, 97.95. So at this point, this the only thing is a little bit lower high here. I don't like that. But the thing is, watch the example here. Look at this, right? Remember what I say? The volume, right? Volume of this coming up right here, this part. Check that out. Lot of freaking volume, okay? Lot of freaking volume. And look at it, 1-to-1, right? You risk one, let me see, 50 cents, $1.50, right? You get back $1.50. 1, 2, 3, 5, 50. And then look at the breakout point. Look at the volume, big volume above the average volume. Okay, so look at that volume breakout. See, so when the volume coming in like that, you know it's a good breakout. Okay, and then you could hold on to it. The volume have to be usually above the average volume, or if anything double the average volume, okay, at that time, and you could see, right, it's decent. Okay, so that's another sign. And then remember what I said earlier, right? I said the volume for the stock, right? Let's bring that down. Average volume was 3 million, okay, in the past 6 months daily. And look at how much of volume this is. 13 million traded today. And at this open right here, look at this open, right? This open, that's already the first 3 minutes, right? There is already 600,000. Okay, by the 6 minute by one by, that's more than 1 million already. So there are a lot of people watching the stock. Okay, and then they see this technical formation, they want to get in. Okay, and when everyone want to get in, it fuels the stock up, and then it squeezes out whoever sell at this point. Okay, so that's the thing. Technical is more like, you know, self-fulfilling prophecy, just so you know. So you need a lot of people to trade it with you for it to work out. Okay, and this worked out perfectly, right? Like all the you know, all the thing, high volume at the come up, consolidation to the cup, usually 50%. Retracement, better is 38%, you know, the Fibonacci number. Okay, and then top break with high volume coming out. That is how you trade a top breakout for a cup and handle formation. And I like this a lot. And another thing is that the time frame, right? This consolidation is around 30 minutes. Okay, the longer the consolidation, the better. 30 minutes is perfect. All right, so that's why I say, like, for the AZN, it's the same thing. Like AZN, you know, take 30 minutes. The technical part looked perfect, but there was no one watching it, and that's the problem. And then with this, right here, this part, the S&P, it was moving up, and it just, you know, coincide with the trade at the same time. So basically, that's it, guys. That is the breakdown of the trade, and you know what a failed cup and handle top breakout trade look like. And I hope you learned something. Drop a comment section if you have any question, and if anything else, that's it, guys. Thank you for watching, and happy trading.